Good morning. Good morning. Having a few technical difficulties this morning, so running a bit late. How are we, folks? Good to see you. Welcome to another Wealth Coffee Chat. Got a few of the early birds on this morning, which is always great to see, folks. Morning, Alison. Tim's in the house. Kevin, all the way from Florida. Luke, howdy. There we go. Alison, if you get stuck, Alison, let me know. Deanne, my EA, is a JP. If you run into troubles, that's an emergency. We can sort it out for you. Yep. It's an interesting one, this one. It plays into this morning's Wealth Coffee Chat, actually. So we'll dive right in. Jason Witten's my name. If you didn't already know, most of you do. So good morning to you, Liv, and whoever else is here. Yeah. Alison's having some challenges. She's trying to buy a property, doing the thing. But you know what? The system, the people, the process is, there's friction in this thing. There's friction in there. It's hard. Listen, folks, it's not easy. All right. It might be straightforward. It might be simple. Hey, buy a property. The steps, the process of buying and owning and investing, takes a fair bit of effort, takes a fair bit of focus. And like Alison's experiencing potentially, just a few hurdles. And for us, you and me as property investors, we need to understand, what's normal, what's not. What to get upset about, what not to get upset about. Certainly, getting upset's probably not a valuable in most cases anyway. No matter which way you look at it, there's always a way you can solve things. And if there's not, then you learn a lesson as we go. So there you go. Perfect timing. Welcome along today to today's Wealth Coffee Chat. Hey, listen, I want to talk to you guys about market sentiment. How do people feel out there? What's going on? How's everyone feeling? The touchy feels. Going on. And some of you might be sitting there right now going, hang on, Jason, hang on. You talk about these ones. Like, let's get some facts. Yes, let's get some facts. Facts is how we make decisions, how smart, intelligent, focused, planned, strategic, tactical investors make decisions with facts based on experience, based on a goal, a direction. However, the market in general, folks, will unfortunately, have some feelings about what is going on. Now, hopefully we're back. It might have cut out there for a second, but I'll just keep rolling anyway. So the market does feel a little bit about, persistence for short term. The market, unlike you and I, who educate ourselves and make sure we keep up to date, up to speed with what's going on, feels, has a bit of action or reaction to things in time, and they react fairly quickly. Now, this is a market sentiment chart, and as of today or around about now, the market sentiment of how people are feeling when it comes to banking, interest rates, the general marketplace is low. It is down at pandemic or pre-pandemic lowness. And if you go back, does anyone remember what this was? 2008, 9-ish. Anyone remember what that era was there? Put that in the chat for me. Who remembers where the market sentiment was in that space? And, let's talk about it. I think the baseline's kind of 100, right? GFC, right? The GFC, the greatest financial crisis the world had ever seen. Here we go. So, what is going on? What can happen here? What does happen here when it comes to, exactly, Jeff. So, and it's my point today, how quick these things can change, folks, right? How quick these things can change as we go along. And where is the opportunity? Where's the opportunity in these things as property investors, if we have a bit of a look, right? And think about, what those things might mean. Now, I'm going to bring this other sort of chart in here, which is the, let's see if I can do this. Let's put me over there. And, that works, doesn't it? So, check out this stuff. So if we sort of scroll in here and make that kind of as we go, so you can see, the weekly asking prices of properties since 2010. And, there's been a steady trend, steady-ish upwards. And, over here where we've got, the pandemic boom, right? It went upwards like that. But you can sort of see mostly the asking prices and values were increasing mostly since about 2010 based on just regular normal market factors, a bit of supply, a bit of finance, bit of normalcy, people got their jobs back, things started to go along, as we go. We had a bit of a dip here in 2018 and 19. Anyone remember what that was? Put that in the chat. It's another acronym. Some geniuses decided that they were going to, mess with our mojo and do some things. Like, tell me, what was that one? Sort of 2018, 19. Interestingly enough, the sentiment world, sentiment wasn't too fussed about it. However, if you look, so we got the GFC and APRA, right? GFC and APRA, bloody APRA, exactly, right? But it did start, so prior to the pandemic, it did start a sentiment decline, folks, a sentiment decline, right? And what I wanted to point out is even though we base our decisions based on facts and good information and those sorts of things, the markets in general react often with the emotions of how people are feeling, right? What does that mean for us as property investors? What do we do? How do we make sense of it, as we go? So right now, sentiment is down. And if we were to be a little dramatic, like the, exactly. That is true. And the government's, I just saw the Andrews government, we need to have tighter restrictions on all these builders that are going broke, right? Fucking kidding me? These turkeys are now trying to blame it, Porter Davis. Oh, they should have had more inspectors inspecting their building sites because they were doing the wrong thing. Fucking kidding me? The government, absolute rotten knobheads. Anyway, get me fired up on this one. I'll do another Wealth Coffee chat on that. You don't need bloody more oversight. You need to unlock the red tape and bullshit and bureaucracy that you pricks cause, so these builders end up going broke because they can't build a house. Supply chains, ludicrous council issues, you name it. Anyway, I'm off track today. Yeah. It was just like the APRA thing. The government failed to do their job in the beginning, and then they wanted to blame the brokers. Yeah. I completely agree, Tim. It is horrible how they treat the builders, and the small to medium businesses in this country. Anyway, don't get me started on that. Stay on track, Jason, today. Stay on track. All right. So, folks, what are we talking about? We're talking about the feelings of the market and what happens and how we can, as investors, folks, let's bump those ones off, how we can, as investors, maybe understand how the market feels and make some decisions around that as investors. All right. So, let me show you what I mean in this sort of space here. All right. What happens is when the market sentiment is down, so this time here, when the market sentiment is down, interest rates are up, a few things are uncertain, jobs, interest rates, inflation, those things, people who think that's going to last forever, people who feel that this is kind of it, either don't make decisions, don't do anything, or they sit on their hands or whatever it might be. Tell me in the chat, what is that for us as investors? Certainly right now, I think it's a good time. It's an opportunity time. Opportunity. It's a time for us as investors to have a look around and go, well, what's going on? In times where things are a bit quiet and there's a little bit of uncertainty, and unfortunately, in the GFC, we had this, opportunity come through. Tell me, folks, right now, it's an opportunity for sure, Josh. Does anyone remember the types of deal making? Maybe one or two of you are around in the 2008s with us. What type of deal making did we do in 2008? Okay. We did a lot of discount, not disco, discount buying, right? Discount purchasing, folks, because, properties had been completed and then finance was too high and people just weren't able to buy them, right? Bulk discount buying. Exactly, Alison. And what is happening right now? Exactly the bloody same. Exactly the same. Exactly what's going on right now. Now, the challenge, so what is happening right now? Before, these were already physically discounted because they had banking collapses, folks. So this was banking collapses, banking. And what are we having over here? Building collapses, right? And we're having finance reductions pretty significantly. Banking, financing has gone down, interest rates gone up. Financing gone down, interest rates gone up. Okay. Yeah, Mick, depending on how old it is, you still can get the tax benefits. Right. So what's the point here? Okay. Where are we right now in the market as we go? So If we are buying, so I'll tell you about, we've got about, 5 or 6 property opportunities right now at Positive that fall into this category. Okay. And there's one in Melbourne I'll talk about, right? So in Melbourne right now, an excellent building. It's complete. It's complete. Okay. The building's finished and brilliant, amazing properties, just fantastic. We're going to do, I think, Alison, did you go there the other week? Our Iconic, a few of the Melbourneites went there, right? To have a bit of a look. So we've got properties that are complete and or nearing completion, and they sort of started, let's say, their version of the world kind of started kind of in 2020 or 2021, okay? So they're coming to completion, and, let's call it 2023, okay? They're landing now, folks, okay? So the point is, their pricing, right, was set back here, okay? The pricing was set back here. Now, between 21 and 23, construction prices have increased anywhere between 30 and 40%, okay? 30 and 40%, right? So depending on what you're purchasing or looking at purchasing now, as of today, let's say you purchase some, something that might take a 2 years to build. The pricing here, let's call it 650. The new pricing for something in the future might be of similar value, 750. Okay. So what's happening, the opportunity where you buy here, certainly the right type of property that you can find and see, you can purchase at a significant discount. And that is happening right now. Now, they're not going broke and dusting their dough. What's happening is they're completing the existing buildings at the prices they'd already locked in, and the new buildings are being priced a lot further, a lot more, because that's going to be the new price. It's not like you're overpaying. You're not overpaying. You're paying a market price based on, the price to produce it. And even paying $750 for the right property is going to be perfectly fine. Nothing wrong with it. You've got the opportunity to buy at a discount because those properties were priced and built from 2 years ago. So the point is, right now, when the market sentiment is down, team, the market sentiment right here is down, right? It's down. And there's not a lot of buyers out there. There's not a lot of people out there going, right, I'll buy everything, right? Because, maybe the finance is hard. Maybe they're worried about the interest rates going up. When this is down and there's not a lot of buyers, it becomes a buyer's market. And if the builder or developer has completed their property, if they've got, let's say, 50 properties, 50 apartments complete, what is happening right now is they have maximum debt, and that debt has just gone up. And what's happening, folks? They've completed their property. They haven't settled or sold them all yet, right? Yeah. They haven't settled or sold them all yet, folks. Their debt is now high. Their interest rates is pretty big. So they're just like, just sell the bloody thing, right? Just get on with it. So you can, if you are ready, if you're Johnny on the spot or Jill on the spot or whoever on the spot, you can be buying discounted properties, significantly discounted off market, because no one else believes in it. Everyone's kind of sad sack. Everyone's going, oh, sentiment's low. Oh, woe is me. Now, there's some real versions of that with people if you've got cash flow issues or whatever, but you're an investor. And what it says right now is, if you can, you buy something really well valued, all right, like amazing value, and you can make some dough, right? That's the point. Feelings are a terrible way to make decisions, right? However, if the rest of the market is making terrible decisions with feelings and you can make decisions with facts, you will be, 9 times out of 10, ending up with a better opportunity, a better outcome, a better whatever. You buy now, the rest of the market waits. They'll be paying $750. you bought for 650 over the next 12 to 36 months, you're going to be ahead. That's it, team. Let's go. I'm with you, Jeff. I'm with you. Don't think that that's not on the cards, Jeff. All right, I've got that. On my to-do list. We'll create our own bank for property investors, I reckon, as we go one day. There you go. Does that make sense? That makes sense. Give me a yes in the chat right now. It's different. It's different to when the GFC was around, but some of the fundamentals are the same. Some of the fundamentals are the same, folks, right? You know, they're still, yeah, exactly, Alison. They're still waiting for markets to crash. You know, investor sentiment is down. Opportunities are there for those who can see them and understand them, and away we go. So happy shopping, folks. Happy shopping as you go. Anyway, that's it. Wealth Coffee Chat done and dusted. I reckon that market sentiment will stay down for, you know, another 2 to 3 months. When and if it does turn, emotions turn pretty quickly, folks. Let's face it. You know, people can be, yay, yay, right? Like that sort of stuff. You know, if interest rates, you know, stay flat and maybe even go down a little bit, then, you know, the market pressures, you know, push people along as well. Anyway, there you go. Right now, I think it's a great time to purchase. And if you can purchase ones that were sort of, you know, priced and completed from, you know, 2021 and 2022 pricing and completions, then, you know, that's exactly right, Kate. For the right type of property, you can be buying properties that were priced and constructed at prices from 20 and 21. They're completing now, and you know, they're sitting there going, "Hey, who wants to buy them?" And because interest rates have gone up, and you know, a little bit of market sentiment, people are nervous, rushing out right now in that price bracket. And you can nick a property. Listen, if something was priced and built from 20 or 21 and it's complete now, it's $100,000 cheaper than the market. End of story. End of story. So, yeah, if you want some help with that, reach out to your coach or your PC. The team at Positive, you know, specialize in those types of deals. So, you know, there's a few left in their stable. And if you're out there looking around and sniffing around and negotiating, keep that in mind. If you're looking out in the free market, you know, those things are an opportunity. All right, folks, that is it. Done and dusted. Wealth Coffee Chat over and out for today. Thanks for joining me. As always, if there's something that you want me to have a bit of a talk about, leave me a little note in the chat. Tomorrow, what's tomorrow? Thursday. I think I'll be around tomorrow. Let me know. Let me know in the chat. I'll read it later, and I'll put it on my to-do list for a bit of a Wealth Coffee Chat, folks. All right, that's it. Thanks for joining me. Remember, a couple of sayings around here. This thing's a marathon, not a sprint. It's going to take time to create the wealth that you want. Buy well, don't sell. All right, folks. You guys be awesome. Be well. Join me tomorrow for another one. Bye for now.